According to the New York Times, the Fed's preferred inflation measure remains stubbornly high. And of course, if you're a Forex trader or you trade the US indices, this is really interesting data for us to pay attention to. With the Federal Reserve remaining incredibly hawkish, we can expect for the foreseeable future that inflation is going to be their number one thing that they're focused on. In fact, that's sort of what they've continuously affirmed with their meetings and such. The Fed is basically promising their main goal is to reduce that inflation. And when we see continued numbers of prices remaining high, it guides analysts to expect that basically interest rates are going to continue to roll out. And that has a couple key stats or key factors on the markets, if you will. Most likely that will result in a continued sell-off in the equities market, which has been a really tough time. If you've looked at the NASDAQ or the Dow Jones, it's been a really incredibly tough year. In fact, the NASDAQ hit 30% down on the 2022 year so far, which is an incredible sell-off. So for Forex traders and for traders who are looking to take advantage, what is the next big move? Well, I want to show you something that I found that I thought was kind of interesting with the Edge Finder, which was the commitment of traders data has some conflicting views to what we've recently just been talking about with all this hawkishness. Now, given the sort of expected result is that smart money is 72% positioned on the long side when it comes to the US dollar. That's big news and probably to be expected with the Fed being so hawkish. Institutional traders have been riding that uptrend on the dollar and making some good money along the way. But what's also interesting is that other assets like gold maintain a pretty high 59% rate of future contracts on the long side from the non-commercials on the COT data. That tells us that big players, they're buying gold and they're buying the dollar. And they're still just about 50-50 on the NASDAQ, 51.21% long, while obviously the other half, 48.79% short on the NASDAQ. If we go down to other players here, we can see things are not so great for the S&P 500, where you have 33% long and the remaining 66.5%, give or take, on the short side. Now, what kind of caught my eye there is that the NASDAQ, despite being sold off more, actually has a bigger position on the long side, it seems, relative proportionally. So kind of an interesting little stat there as well. Another thing that's really key is we've been noticing that the Japanese yen and many other currencies have been falling, but oftentimes we expect the Japanese yen to act as a safe haven in an environment like this where basically markets are crashing and things are terrifying. We would expect the yen to be strong as well as the Swiss franc, where we see from institutional positioning that they've bailed on the Swiss franc, they've bailed on the yen, and they've just been favoring that dollar. Now, until that sort of changes, the dollar remains king in our eyes. We remain to be bullish on the dollar, looking for pullbacks and buy setups primarily. With that said, I want to turn over to the technical charts. I'll show you guys some ideas and things that I'm looking at today. By the way, what we're looking at here is the A1 Edge Finder, and if you don't have a copy already, we'll leave a link down below in the description where you can sign up to get a copy of it. And if you use that promo code, you'll get a big discount off of the tool. So taking a look at some of the USD pairs, I'll show you guys first one trade that I personally am in right now, which is going okay. We had an entry back here at the pullback level right around the 97.58 level on dollar CHF or dollar franc. And I've been long on this thing for a couple days now, pretty much this whole week. Price has been sort of just consolidating back and forth, but I do think that this has potential to continue bullish. We'll see if I am correct about that. But again, like I mentioned, from a fundamental perspective, we are basically continuing to be bullish on the dollar until further notice. Now, this is one pair that I'm interested in, but there's other ones as well. For those of you guys who are watching dollar Swiss franc, again, of course, what I like here was this 61.8% retracement. If you're inside of our private VIP group, of course, you'll have seen the trade alert that I shared, but I went long right here and held it. It's just been kind of going sideways, but I'm looking for a breakout here. So for those of you guys who are watching dollar Swiss franc yourself, one thing I would look out for is, of course, the key breakout level at 98.34, possible breaks and retests. I do think that we have potential to go back and retest the highs as this thing is in an overall nice uptrend on the 4-hour chart. Next one is USDJPY. Also looking for bullish setups here, but one key notable thing is on the daily chart, I'm looking for a breakout on 144.50. zero. So something like this, right? Breaks, retests, continuation plays. If we can break above that, I will be happily looking for some long positions on this pair, as it has been in a monstrous uptrend this year and something that I look to continue to be on the side of rather than trying to fight. So there's dollar yen, dollar Swiss. We'll also take a look at gold here. Until something cools with the Federal Reserve, to me, pullbacks on this chart look more like sells than anything else. So for me, as we come up into a level, for example, like this with gold, we have the 1685 mark, give or take, which seems like a pretty key spot for sellers to possibly take advantage of a sell-off here. This looks like just about a 61.8% retracement. Yep, if we clean that up just a little bit. If price pops up there, perhaps next week or towards the end of today, that could be an opportunity, in my opinion, to look for sells. And the idea there is basically just trend following, trend continuations. As you get a pullback in this overall downtrend, looking for the continuation move has been very profitable this year, and we continue to look for those sort of setups. Of course, if the dollar is expected to be so strong, we are looking primarily for gold shorts, right? As the dollar strengthens, it could cause some weakness, or continued weakness for that matter, on the gold chart. Of course, we also have euro dollar, the big one, right? Everybody, the most popular currency pair in the world. Of course, Euro USD here. We have a key pullback zone that I wanted to point out. Of course, we have two spots that I want to note here on the chart. So we of course have the 50% retracement and the 61.8% retracement. Both of those look like areas where personally I think they look more like good opportunities to sell than anything else. As we jump up into this area, we have resistance looking left. This previous low, once it was taken out, it was taken by storm. So I expect, until proven otherwise, that sellers would likely want to try and get strong there and continue the overall push to the downside. If things do manage to break above there, I think there's a second chance opportunity, perhaps at the 61.8, around 99.50. And if we take a look at pound USD as well, we can see that the pound looks pretty interesting around that 61.8, seeing a bit of rejection as we have talked about on the live streams previously this week. You can see our chart marked up from the days past. So nice little sell so far. We'll see if that can continue to the downside, but again, remaining bearish on this pair, due in part from our bullishness on the dollar, as well as the sell signals that we've been getting on the edge finder for pound dollar, euro dollar, etc. So there you go, a little technical breakdown on the dollar crosses that I'm paying attention to right now. And thank you guys for watching. Make sure to subscribe and hit the thumbs up button on our YouTube channel here, A1 Trading, and we'll see you next time.